We will begin. Okay, so all right, we'll begin with the end in mind, if you like, and we will first start with the introduction of Sharia. We'll look at the sources of Sharia that'll take us to the Islamic world view. During the discussions, we will look at the Islamic financial system, and we'll also take a look at the general principles of Islamic commercial law. We will discuss the major difference between conventional banking and Islamic banking. And we'll look at the Islamic banking operations. The legal framework would come right after that. And we will talk about or discuss the regulatory regimes of Islamic financial institutions. Sharia governance aspect of Islamic financial institutions will come right after that. And you will have the conclusions right after that. So respected participants, together we will look at the introduction of Sharia, or the Islamic legal system. Presentation proper will start, and then we will look at the Islamic world view. How does the Islamic world view look like? This is the Islamic world view. You have Allah subhanahu wa ta'ala, that is our creator, and you have the individual right here, and you have society on the other end. What's the relationship between Allah subhanahu wa ta'ala and the individual? Allah subhanahu wa ta'ala, no doubt, is the creator, the master of the day of judgment, and the human being or the individual here is the created. And the society is detached from the individuals who form a group of society here. What we want to do is to link the relationship between Islamic financial institutions, because Islamic financial institutions are what they are because of their unique nature, i.e., their compliance to the principles of the noble Sharia. So that is why they are different from the conventional banking operators or conventional financial institutions, because they are linked, they are regulated by the laws of Allah subhanahu wa ta'ala. The contract between Allah subhanahu wa ta'ala or the individual and his creator is an implicit contract, i.e., you are created by Allah subhanahu wa ta'ala. وَمَا خَلَقْتَ الْجِنَّ وَالْإِنسَ إِلَّا لِيَعْبُدُونَ. Allah subhanahu wa ta'ala tells us in Quran that he did not create mankind and jinn except that we should obey and worship him. So that is why associating partners to Allah subhanahu wa ta'ala is a serious crime in Islam. The society, the relationship between the society and the creator, Allah subhanahu wa ta'ala, is also an implicit contract, meaning obedience to the laws of Allah subhanahu wa ta'ala as prescribed in Sharia. Now, what we are trying to look at here is to detach or to find a base here, i.e., why are Islamic financial institutions Sharia compliant? Why are Islamic financial institutions different from their conventional counterpart? What are the laws that govern Islamic financial institutions that are different from the laws that are governing the conventional banking or financial institutions? Here, the individual and the society, the relationship that exists between the two here is an explicit contract. So this is where you will find the Sharia Islamiyah. Since we don't have much time, I haven't heard from the organizers as to how they intend to manage the session. I'll just run the session probably up to a time that we finish the slides, or if they stop me as we present, then we wouldn't have any options except to hand over. An introduction of Sharia. What Sharia generally means, it means Islamic law. When you mention Sharia, it sounds super huge. It is huge, of course, but the way people who don't understand Sharia, how they interpret it as cutting people's hands, cutting people's neck. When you commit something, they stone you to death. They basically don't have the understanding of the foundations and the maslaha, that is the maqasid Sharia. That is, what are the objectives of Sharia? Why do we have Islamic Sharia? The beliefs or the objectives, the benefits of having a Sharia law. The three basic branches of Sharia are the beliefs, the moral or the ethic, and if you like, the fiqh, code of laws, the jurisprudence. Sharia is the rules that are ordained by Allah subhanahu wa ta'ala for his servants through his messenger, sallallahu alayhi wasallam, Muhammad sallallahu alayhi wasallam. How did we come to find out about Sharia? How did we come to know about the principles or the laws of Sharia? We came to know this through the Prophet sallallahu alayhi wasallam. That is why we have the sources of Sharia. We will discuss it in probably slide number 7. That is, what are the sources of Sharia? How did we get to know about Sharia and the hierarchy of the sources of Sharia? Fiqh is pretty much Islamic jurisprudence, the knowledge of the practical Sharia rules, which is deducted from their respective particular evidences in the form of ijtihad and power of reasoning, where you have the madhabs, that is the school of thought. Remember, the permissibility of an Islamic financial instrument depends on the madhab, where you belong to. That is where you are actually operating as a financial institution. This course is not meant to take you through the core concepts of fiqh. What we're trying to do is to present this course using the mu'amalat concept, that is the Islamic commercial law principles here. So that is why we are not going to go deep into the fiqh aspect of it. We will just touch base for us to have an understanding of what is halal, what is haram, what is permissible, what is acceptable, because our products and services as financial institutions will be Sharia compliant based on how we understand it. So what I was trying to say here is that the madhab, which is the school of thought, you have 4 schools of thought. You have the Hanafi school of thought, the Maliki, the Shafi, and the Hanbali school of thought. In West Africa, what you have is the Maliki school of thought here. So products that probably are accepted, permitted in West Africa might not be Sharia compliant in East Africa. For example, in Ethiopia. Ethiopia, I think, yeah, they're in the Hanafi school of thought. Hanafi or Shafi? I'll find out later in the lecture. But that is to say that the acceptability, the permissibility of a product to a certain level, as long as it conforms with the basic, the fundamentals, principles of Sharia. That's what we're talking about here. As long as it conforms with the fundamental principles of Sharia, the permissibility of a product or a service in an Islamic financial institutions would depend on the madhab. Take note, it first must conform to the fundamentals of Sharia. Where scholars have difference of opinion, then it will depend on the madhab. The Sharia and fiqh are used interchangeably. In Quran, Allah subhanahu wa ta'ala told us, and this is evidence in the Quran, that we gave you Sharia in religion. Follow it and do not follow the lust of those who do not know. This is from the Quranic quotations. Now, what are the general conditions on Sharia? What are the general conditions of Sharia? First of all, we said that it is what was revealed or what is revealed to the Prophet sallallahu alaihi wasallam. Principles and laws which are prescribed in Quran and Sunnah. Quran is the book that is revealed to Muhammad sallallahu alaihi wasallam, to humankind and the jinn, and the Sunnah is the traditions of the Prophet sallallahu alaihi wasallam. The Sunnah are his traditions, what he did, what during his time he permitted, what he did not say anything about, although it was practiced. Those are call the Sunnah or the traditions of the Prophet sallallahu alaihi wasallam. Pertaining to what? Pertaining to dogmas and the actions of who the legally responsible persons, that is called the mukallaf in Arabic, the legally minded people. Sharia doesn't apply to someone who is absent-minded. Sharia doesn't apply to someone who is a minor. See, the Sharia is very, very fair. It's a very, very transparent judicial system. So that is why if we had lived under the principles or the laws of Sharia, society or the world would have been a better place. That is, you wouldn't have the most powerful trampling on the weakest. You wouldn't have the most powerful taking advantage of the less powerful. This is what Sharia does. For what? Why should we have Sharia? We first said that it is for the legally responsible persons, not people who are crackheads, like they would call them in the United States. People who are not with their five common senses, and people who are minors, they haven't reached a certain age. That is why in Sharia, we probably just go a little bit into the details. For someone who is not, who hasn't reached the age of a mukallaf here, cannot enter into a contract by himself without their parents or without their guardians. That is, before, you cannot buy a car from a minor. He doesn't know the financial implications of selling his car. So you probably would deceive him in the transaction. So that is why for a minor to enter into a transaction or a financial transaction, he or she must be guarded by their parents or their guardians. This is the justice of Islamic Sharia. Forward for the well-being of the society in this world and in the hereafter. That'll take us to slide number 7, where we will take a look at the general considerations of Sharia, the general considerations of the noble Sharia. We are now going to look at the general considerations of the noble Sharia. Sorry, the slides keep changing as I... Mr. Mansour, are you with me?
Yes, sir. Sure, inshallah. We're surely with you.
Yes, sir. I'm with you.
Like I said, halfway, we will allow maybe 5 to 10 minutes. We had wanted to do this, but we were settled to be here from 11 to 12. So we'll continue lecture proper, inshallah. The general considerations of Sharia. The general considerations of Sharia. Now, the general considerations of Sharia is compliance with Sharia means obeying the will of Allah subhanahu wa ta'ala in all aspects of life, which would include the following. Obeying the laws of Allah subhanahu wa ta'ala in your financial transactions. When you enter into financial transactions, understand or have the belief that Allah subhanahu wa ta'ala is a partner to two people who have entered into a financial transactions before one of them starts to deceive the other one. So it is an act of ibadah for the Muslim to be active in financial transactions. That is, Muslims must be economically active. We cannot sit and fold our hands and expect that our lives will be better. So as Muslims, we must participate in an economic activity. A Muslim who is useful to the society is better than the Muslim who is not participating or useful to the society. So the relationship between Allah subhanahu wa ta'ala, the relationship between human and God, you have the relationship between transactions that is the mu'amalat between the human beings and human beings' purpose of existence. These are some of the aspects of Sharia. Islam provides complete code of conduct covering all aspects of human life and society, including financial transactions. We are driving at the objectives of Sharia. What are the objectives of Sharia? Sharia compliance of any financial transaction or institution would mean that the institution is submitting to the laws ordained by Allah subhanahu wa ta'ala in all their operandas or in all their modus operandi in terms of offering the products and delivering their services. What are now the general considerations of Sharia? What are the components of Sharia? You have the belief aspect of it, that is the itiqadiyya. You have the amaliyya, which is the dealing aspect of it. And you also have the akhlaqiyya, which is the morality aspect of Sharia. We will detach this. We will leave this one, and we'll now go with the amaliyya, which is also branching off into two, that is the ibadah aspect and the mu'amala aspect. We will narrow it down to the mu'amala aspect, that is the ibadah is the human with his creator. وَمَا خَلَقْتَ الْجِنَّ وَالْإِنسَ إِلَّا لِيَعْبُدُونَ. Allah did not create you except that you should worship Allah subhanahu wa ta'ala. The mu'amalat is the human with human relationship. The relationship between human beings is the mu'amalat aspect of it. So now, under the mu'amalat, we will also divide it or detach about 4 components here, which is the politics aspect of it, the criminal aspect of it, and the family law aspect of it. In societies, Muslim societies, we expect to have a system of governance. We don't live in the jungle. We expect to have rulers and we expect to have subordinates. Under that, we ought to have laws that are governing these systems. That is the laws that are governing the society. Under those laws, you have the criminal law. You also have the family law. That is where you'll have marriages, divorces, and inheritances. But the 4th component, which is one of the most important in today's discussion, will be the economy, where we will be discussing issues in Islamic financial transactions. Are we together? Am I with you guys?
Yes, sir.
Beautiful. So now, let us further look at the components of Sharia. Let us look at the components of Sharia. You have...
we are indeed. Sure.
Okay, sounds good. Sounds good. Now, you have the aqidah part of it, which is the most important aspect of this component of Sharia. Once you have an aqidah that is bad, a messed up aqidah, a dodgy aqidah, your belief or your faith will be you would definitely get yourself in trouble. You wouldn't be doing the right thing. So aqidah, having the correct aqidah, is fundamental in Islam, which concerns the faith and beliefs in Allah subhanahu wa ta'ala, the attributes of Allah subhanahu wa ta'ala, the oneness of Allah subhanahu wa ta'ala. So this aqidah here is very, very important. So that is why it is the foundation of faith. Aqidah is the foundation of faith. So that is why as a Muslim, you should make sure that your aqidah is based on the correct aqidah. We are not going to go into the details here. We will look at the practices and the activities, and that will be known as the fiqh. This concerns the practical actions in manifesting your faith and your belief, your prayer, your fasting, the zakat that you give out, you know, the direct commandments that you are following as a Muslim, the practical aspect of it. And you also have the akhlaq, which is the moralities and the ethics, which concerns your behavior, your attitude, work ethics in taking practical actions here. Part of the reason why, this is from an authentic hadith here, why people would enter Jannah is as a result of good behavior. So that is why in Islam, good behavior is highly recommended in Islam as a Muslim. You must be an example to the rest of the world. You must be an example to the people that you work with as a Muslim. So good morals and good ethics are highly recommended. Our intention here is to detach the mu'amalat from the fiqh here, where you have the ibadat, man to God worship, concerning or covering the practices of worship of Allah subhanahu wa ta'ala, and you have the mu'amalat, man-to-man activities. Remember, our financial transactions are between or amongst ourselves, the buyer and the seller, and the witness to the transactions, and the subject matter, which is the object that you guys are selling. This concerns the practicalities of the daily life in various forms of man-to-man activities. The political activities, the social activities, our main concern, like we said earlier on, would be the economic activity. Let us now look at the status of the actions. That is the 5 actions, the legal status of the 5 actions. When you share a product or service, when you say riba is haram, what makes it haram? Riba is haram because there is an ayah in Quran where Allah subhanahu wa ta'ala says, وَحَلَّ اللَّهُ الْبَيَّ وَحَرَّمَ الرِّبَى. Allah subhanahu wa ta'ala said he has made in Surah Al-Baqarah trade lawful. Trade in financial transactions is lawful, and riba, which is taking interest or usury, is haram. So in a similar verse, the people who consume riba would not be able to wake up properly on the day of judgment. They will wake up blind on the day of judgment. That is how serious consuming riba is. We are not going to go into the details about riba, but we'll have a look at the 5 actions or the legal status of the 5 actions where you have haram. Haram means a demand from the lawgiver, Allah subhanahu wa ta'ala, to the legally responsible person and the matured person. Maturity is not what the West call maturity. It is what it is according to the Islamic Sharia's maturity we're talking about here. In respect of what abandoning something and the implications for abandoning what is haram is a reward, and not leaving what is haram is a punishment in this dunya and in the hereafter. What is the punishment for engaging in haram activities? Someone who is engaged in haram activities, it decreases your risk, your sustenance. Your sustenance becomes very, very tight if you are engaged in haram activities. Engaging in usury or interest, because this is an Islamic finance course, what that leads to is there is no barakah. There will be no barakah in your wealth. So we probably would ask ourselves this question: why is it that during the global financial crisis, the hardest hit financial institutions were the conventional banks, the conventional insurance companies, and the least hit were the Islamic financial institutions. So you may ask probably this question: why were the Islamic financial institutions hit, since they are not engaged in riba activities? This is as a result of financial intermediation, because Islamic banks or financial institutions are not stand-alone financial institutions. They deal with these conventional banks to an extent in the form of financial intermediation, let's say correspondent banking issues, clearances, and transfers to a certain level. But the modus operandi of the products are not something that they will touch. Makruh is reprehensive. That is a demand from Allah subhanahu wa ta'ala to the mukallaf, we said the legally responsible person, in respect of abandoning something, but this is not binding. The implications here are reward. For example, when you are performing wudu, it is highly recommended or reprehensive to be using a lot of water. It is reprehensive. It's not a sin, but you are advised that you should use a little bit of water, just because Islam encourages saving water, not to be extravagant in whatever we do. So using a little bit of water is highly recommended than opening the tap and then a large amount of water will be pouring. Mubah is optional. It's a communication from Allah subhanahu wa ta'ala to the mukallaf, giving him option to do and not to do something. If you do it, you'll have a reward. But if you don't do it, there would be no punishment for it, which would be similar from mandub. This is also recommended. It is not binding, and the implications are reward. However, what is wajib is obligatory. It is a binding demand from the lawgiver, Allah subhanahu wa ta'ala, to the mukallaf in respect of doing something. The implications of observing what is wajib is a reward, and leaving what is wajib would attract punishments. We spent so much time on these slides. Let us now take a look at the sources of Sharia. And we said earlier on that Sharia has a hierarchy. The primary source of Sharia is the Quran, the book of Allah subhanahu wa ta'ala. Sheikh Mansour, are we together?
Sir. Yes, sir, I am there.
Beautiful.
Sure,
beautiful.
sure. I'm also on board.
Okay, what's your name, my brother?
Brother Muhammad Jawo.
Oh, that is the brother who's been talking to me, right? Muhammad Jawo.
Sure. I, at the initial point, faced fluctuations in internet and had some technicalities, but I'm now on board.
Sounds good. Muhammad Jawo, you are the admin for this program, right?
Sure.
We are 30 minutes late. I'm sorry to say this. What's the schedule? Are we continuing for another 30 minutes?
Sure.
Agreed?
Sure.
Okay, sounds good. Now, the sources of Sharia. What are the sources of Sharia? The sources of Sharia, I'll now slow down a bit because I was speaking very fast with the belief that we wouldn't have enough time to cover the session. So I'll now slow down, inshallah. Okay, so what are the sources of Sharia? The sources of Sharia are Quran. That is the primary source of Sharia. The book of Allah subhanahu wa ta'ala revealed to the noble Prophet Muhammad sallallahu alayhi wasallam. The second source is the Sunnah. That is the traditions or the traditions of the Prophet sallallahu alayhi wasallam. And the third aspect here would be the ijma. That is the consensus of the Muslim. It's not when you say consensus of the Muslims, I think I need to change this here. It's not all the Muslims. It is the consensus of the respected scholars, not the Mr. Anybody's like me. It is the ijma, the consensus based on rulings, That is the ijma of the scholars who are upon the truth, what they agreed on based on a particular contemporary issue. The case, it is the form of an analogy, a situation that is based on an event that preceded it, based on how the scholars understand that event and how time keeps changing. So the hierarchy of the sources, like I said earlier on, are the Quran, the Sunnah, the Ijma, that is consensus of the scholars, the ulama, and the Qiyas, which is analogy. We move toward the objectives of Sharia. Why do we need Sharia? What is the maslaha? What is the maqasid Sharia? Allah subhanahu wa ta'ala tells us in Quran that we have sent you, Muhammad sallallahu alaihi wasallam, not but as a mercy to the whole universe. وَمَا أَرْسَلْنَا لَكَ إِلَّا رَحْمَةً لِلْعَالَمِينَ. The objectives of Sharia, therefore, are divided into 5 components. The first component would be for the promotion of religion. Sharia aims at promoting religion. Man cannot live like an animal. We've been sent, or we've been created by Allah subhanahu wa ta'ala to worship him alone. And you cannot worship Allah subhanahu wa ta'ala properly if you don't have a religion. And the proper religion today is Al-Islam. The second aspect would be life. Sharia aims to promote life. And as a Muslim or as a human being, your life is a manna on you. It is a trust from Allah subhanahu wa ta'ala. As a result, the conditions here are that you have to live a good life. You have to live a life of a Muslim. You cannot live the life of someone who is in the jungle. So as a result, what we're driving at here is that you cannot take your life deliberately. It is not your life. It is an amana on you. You cannot take your life. You cannot commit suicide. So that is why the committing suicide, because of frustration here, it is a grave sin on the person who commits it. And the third aspect would be the intellect. The intellect here is that as a human being, you've been given a sound mind. You've been given a mind to be able to think, to utilize your mind, not to be a useless person. So this mind, as a result, you cannot take substance. You cannot adopt a methodology, or you cannot take any substance that will render you to become someone who is incapable in the society, that will intoxicate your mind. Taking hard drugs, taking alcohol, taking any substance that will tamper with your intellect. Posterity, as a human being or as a Muslim, you are supposed to promote, you're supposed to get married in Islam. You're supposed to be married, have a family, have a wife, have kids. And the most important aspect here that we are trying to look at here is wealth. Muslims are not supposed to be lazy. Muslims did not inherit these financial transactions from Adam Smith. Like some people think that economics is the Adam Smith style of economics. Muslims had their system of finance before the coming of the Western economics and financial practitioners. During the time of Umar ibn Khattab, his caliphate, they had what is called the Baytul Mal. The Baytul Mal is the national treasury. The national treasury, some people were given money from the national treasury to go and carry some economic activities for the state. And if they had profit from that, they were assigned to take part of that profit, but the principal and the other part of profit will go back to the state. So Muslims, we had an organized system of finance before the coming of the Western financial system. So the maslaha, the maqadi sharia, in these 5 aspects will be summed in one thing, and that is to preserve and promote social justice. Are we together?
Yes, sir, we are together.
Sure, Honorable, we are indeed.
No, brother, not honorable. Okay, the Islamic financial system. Let us now take a look at the Islamic financial system. In a simple, in about 12 slides, we just looked at the, Sharia, the sources of Sharia, and other components of Sharia. We looked at the 5 legal status. We also looked at the Makadi Sharia. So now let us look at the Islamic financial system. How does the Islamic financial system look like? The economic activities in an Islamic financial system, let me see if I can have a pointer here. No, that's only possible when I PowerPoint show it. Okay, the commercial aspect is one of the components of the economic activities in an Islamic financial system, and the charitable aspect is also another component. Under the charitable, you have the non-profit component of it. In commercial activities, you have trade, you have banking, you have the finance, and you have the investment. Under the charitable or non-profit component, you have the loan, which is called, but this loan can only qualify if it is a Qardul Hasan. A Qardul Hasan here is a benevolent loan. What's a benevolent loan? It is a loan that doesn't attract interest or markup, for that matter, profit. We are talking about non-interest financial institutions, so we will try to shy away from the interest element of it here. So the markup or the profit, a loan that doesn't attract a markup or a profit is a benevolent loan. Banks normally would give this to their staff who want to get married and who probably want to pay school fees. They're working with the bank. So the bank would give them a benevolent loan, a loan without charges. The zakat is the annual payment on your income. Waqf is endowment. Endowment, just for clarity, is when someone entrusts his, for example, piece of land, he gives it out for the sake of Allah subhanahu wa ta'ala to someone to manage, either to run a madrasa, a memorization center, or to dig a well there, or as a guardian. He himself would not be directly involved or interfere in the management of this Waqf project. There is a lot of confusion around Waqf projects. People give out Waqf and they are directly involved in the management of the Waqf project, which is wrong. The Sadaqah is the charity that you give out willingly and is different from Zakat. Zakat is compulsory and Sadaqah is highly recommended. We will now look at, yes, sir.
Sir, once please explain about Waqf. I heard this for the first time, so I want to know a little more.
Yes.
What is Waqf?
Waqf is endowment. Endowment is when someone is, it's not inherited property. It is the person who is executing this Waqf, he is alive. He hasn't died yet, he is alive. But he says that if this piece of land that I have here, I am now going to give it to Brother Mansour to run a madrasa there. I'm going to give him the land for him to run a madrasa in this piece of land. Now, the proceeds from this Waqf project, this land and this madrasa, I have nothing to do with it. I've given it, it's like you've given it to Allah subhanahu wa ta'ala. Basically, that's what it means. So the brother Mansour will now manage this school. He will, if you build the school for brother Mansour, he'll only have to be running the school, pay the teachers, and pay for the cost of running the school. But Mr. Abdullah, who gave this property as Waqf, will not be directly interfering into the management of the Waqf.
Okay, sir. Thank you, sir. I got it.
Yes, it's an interesting area that I intend to make a research on. That is the amount of Waqf funds that are coming to Muslim countries and the impact of these Waqf funds directly into the beneficiaries there is a huge disparity. I don't know at your end there, I don't know where Brother Mansour is coming from, but if you look at sub-Saharan Africa, there's a lot of funds coming from Muslims who intend to donate this money as Waqf, but the project's beneficiaries don't get to directly benefit as much as required.
Sir, I am from Nepal.
Oh, okay, beautiful. Have you seen any of such projects in Nepal?
Yes, sir. There are too many such projects.
Yes. What is the impact? Have you seen, has the impact been encouraging from your end, Nepal?
Sir, I had so many madrasas, Quran memorization center have been established by this Waqf. I don't know. I just knew the terminology, but I have seen such activities in my country.
Beautiful, beautiful, beautiful. Okay, let me now draw your attention to the size of the Islamic finance services industry. That is, we always talk about Islamic banking. Why are we always talking about Islamic banking? That is because the chunk of the assets in the Islamic banking and finance industry is concentrated. Islamic finance industry is concentrated in the Islamic banking sector. So as we can see from the slide here, 72% of the assets, of the global assets in the Islamic finance industry are in the banking sector. The Islamic capital market is where you have the sukuk, both the ijara and the salam sukuk, Islamic capital market products. How does this operate? Just because I realize that some of the participants are new to this project, so I think I need to come down a little bit to some of the basics and fundamentals, because the objective is not just to come and deliver a lecture, but for the participants to understand the lecture. For me, that's the most important thing. Capital market products are normally, in the Islamic capital market, are normally project-based investments. For example, in Nepal, if the government wants to build a bridge between, I don't know what your states are, one of the states to your capital, and they don't have the funding, they don't have the money. So what they'll do is they will structure an ijara sukuk. They will structure a sukuk where they will sell commercial papers to investors, and they will structure it around a real asset, which is building the bridge between the capital and another state. So in a sense, they will mobilize funds, invest in the bridge under the terms of BOT, that is build, operate, and transfer, using an SPV, that is a special purpose vehicle, which will be managing the product, the bridge project. So the bridge will be rented to the state, that is the Nepalese government, and the government will now be paying rent to this bridge, towards this bridge. The rental monies will now trickle down to the people who contributed to build this bridge. Simple terms, this is how you have an Islamic capital market. So 27% of the assets are concentrated in the Islamic capital market, and the takaful or retakaful, what takaful means is Islamic insurance. Takaful is Islamic insurance. How is it different from the conventional system? This is not a takaful class or course, but this is a participatory means of insurance, whereby the people who are contributing towards the policies get to have a profit at the end of the day. How do they get to have a profit? That is when the global takaful, that is the institute or the takaful company itself, would net off between how much they've paid towards compensation and the balances that they have towards contribution. That is the money at the end of the day that they will share, with the takaful participants. So we are saying that 1.3% of the funds are in takaful. I'll now draw your attention to the general principles of modern Islamic finance. The general principles are the freedom of contract. In Islamic financial transactions, you are free to enter into a contract. No one should compel you from participating in an economic activity, whether it is directly or indirectly. The mutual consent, that is, both parties here must agree. That is, the buyer and the seller should agree in these financial transactions. We will look at the main points here, that is the avoidance of riba in financial transactions, gharar, maisir, and illicit goods or services, for example, pork and liquor. Riba is the same as interest. Any interest element in Islamic financial transactions is haram. Gharar is speculation. For example, you cannot buy what you don't own. The Prophet ﷺ forbade transaction or buying or selling something that you don't own. For example, you live in Nepal and you tell your client that I am selling my car to you, which is currently in New York. The car is in New York. I will buy it next week. I'm going to buy the car next week, but I'm entering into a buy and sell with you today. So you buy the car today, but I'm going to buy the car in 2 weeks' time from New York. That is the same as selling what you don't own. This is highly prohibited in Islam. Maisir is gambling. The conventional insurance policy is a pure gambling apart from the national lotteries that you see around. So gambling, whatever form it is prohibited in Islam. Illicit goods and services, for example, dealing in pork, liquor, and some raffle draws that the banks would do. They will engage in raffles. If you open an account around this time, we'll give you a plot of land, or we'll give you this and that. Those are examples of gambling by financial institutions. Is highly prohibited in Islamic commercial law. So what are the principles now, the core principles of Islamic financial transactions? The core principles are prohibition of riba, I've explained it, prohibition of uncertainty, I've mentioned it. The transaction must be a clear and explicit one. Prohibition of injustice and deceit. I cannot tell you that the car that I want to sell is in America, or is coming from America in the next 5 days. The car is a 4-wheel, it has so and so speed. At the end of the day, when the car arrives, it's not a 4-wheel, and the speed and the features that I mentioned in this car are not applicable. That is prohibited because it is injustice and deceit. Prohibition of dealing in forbidden activities or items like purchase of guns and weapons. Apart from the states can enter into such activities, but people cannot make that as a business. That is the financial transactions by dealing in arms and ammunition, drugs, and alcohol. Consideration of outcome. In Islamic financial transactions, you cannot blindly enter into a contract. Any economic activity that the person is entering into has to have an outcome. That is, an economic outcome must be there for you to enter into that financial transaction. Otherwise, it is taking excessive risk. Rate of return is subject to risk. That is to say that for you to earn profit, for you to benefit from profit, you must take a risk. In Islam, you are not entitled to profit if you are not willing to take a risk in a financial activity. For example, to deposit money or funds in a bank would depend on the risk that you are taking. If you deposit your funds in an Islamic bank, you are telling the Islamic bank to invest your funds in Sharia compliant economic activities. Once they do that, the returns that are now derived from that investment is shared between the bank and the depositor. Are we together?
Yes, sir. We are together.
Are we learning? I hope I'm not just presenting a paper and we are
Yes,
not
sir.
learning.
It's very interesting and knowledgeable.
MashaAllah, MashaAllah, beautiful. Allah is kind. Respected viewers, brothers and sisters, I will now take you to the second part of the discussion, and that is the comparison between Islamic banks and conventional banking. We have 30 minutes to go. We'll try to speed up a little bit. Islamic banks versus conventional banking. The scope of business. First, we look at the scope of business. We look at the restriction of activities. We look at Sharia compliance. And we will now look at the relationship between the bank and the customer and the function of the bank. These are the five main sectors or areas where you can look and compare between the two banking services. That is the Islamic and the conventional. The scope of business, activities are approved by the Sharia board. That is, all Islamic banking activities are approved by Sharia. Whereas in a conventional banking operates in a secular principle, i.e. no relationship with religion. Islamic banking is banking with the laws of the creator, banking with faith, finance with faith, faith-driven funds. Conventional banking is a system of banking that has no relationship with religion. It's do as you wish. We will have a look at that in some of the modus operandi. What are the restrictions of activities? One of them is the activities are subjected to Sharia compliant principles. The activities of an Islamic or non-interest bank is free from riba. That is, financial transactions are based on Sharia contract. Involvement of speculative activities, gambling activities are strictly prohibited in an Islamic bank. In a conventional bank, deposits and finance are based on interest determined by the bank. How does this work? It works in this way. If you deposit your funds in a conventional bank, that is a riba-based bank, what the bank does, they agree to pay you, let's say 3% interest. Okay? They are taking the funds, they pay you 3%. If I come to take the same funds which you deposited, conventional banks don't deal with real, they don't deal in the real sector of the economy. They don't deal in assets. They deal with money. If you deposit your money in a conventional bank, another person comes to take your money. The bank would now agree with you on 3%, you the depositor, and they will lend the same amount to another person who needs the money urgently at 10%. They are paying you 3%. The person taking the money is paying them 10%. So the 7% is the differentials here. The bank is going to make 7% out of your money, but they're getting 10%. They will keep the 7% and they'll give you 3%. Predetermined, regardless of the outcome of the economic activity or the investment, you're going to get 3%, the bank is getting 7%. No justice, no transparency, okay? So here, the bank is taking a risk on one hand. That is, now, supposedly the customer doesn't pay them back the money. The customer took the money, they don't pay them back. The bank is still locked into a contract with you, the depositor, because they agreed to pay you 3%. On one hand, it's not fair. Now, on the other hand, the bank is now making 10%, and they're only giving you back 3%. It is also unfair on this aspect for the bank to take 7% and only give you 3%. No restriction on involvement in speculative or gambling activities. So in this form of finance, conventional banks are involved in speculation. That is, they are into swaps, they are into options or puts. So if you look at it, these are highly speculative activities, if you understand how conventional banks work. Sharia compliance. Banks must have an internal Sharia compliance, which is responsible to ensure that all activities comply with Sharia requirements. In the conventional bank, this is not applicable. The relationship between the bank and the customer depends on Sharia contract, that is business partner, investor, entrepreneur, or creditor, debtor basis. If you have your money in an Islamic bank, you are not only a depositor of the money, you are an investor. That is the difference between the Islamic bank and the conventional bank. In the conventional bank, you are a creditor. Once you put your money in the bank, you are seen as a creditor, but not an investor. Meaning the money, the bank is supposed to give you back the money at the end of the day, regardless of the outcome of the economic activity. In an Islamic financial institution, you put funds with the bank. Your deposits are commingled with the bank's deposit, with the bank's funds, and invested in a Sharia compliant venture. Profit and loss is shared according to, if it is a musharaka, according to agreed ratios. If it is a mudarraba base, is the Rabbul Mal will lose his money and the mudarrib will lose his share of the profit payment. The functions of the bank: fund generator, entrepreneur, financier, or capital contributor. And the conventional banking system will be just as a lender. The bank becomes a lender. The bank, that is the Islamic bank, is a fund generator. It becomes a mudarrib, that is an entrepreneur, or a financier, that is in the form of murabaha or capital contributor if it is a joint musharraka base. We are still under the difference between the conventional and the Islamic bank. If you look at the funding part and the financing part, under the funding part for Islamic banks, you have mudarraba deposits under the profit sharing, and you have the non-mudarraba deposits, which are entitled to hiba or guess or gift for that matter. This is under the Islamic banking, where you have the trading contracts, the investment contracts, the supporting contracts, and the gratuitous contracts. This is where the Qardul Hasan will form, that is the benevolent loan. Under trading, you have the ijara. I just mentioned the ijara in Nepal. That is where building a bridge is beyond the government's muscle. So they'll sell some certificates to mobilize funds to build the bridge. That is ijara. Under sale is where you have murabba, cost plus the markup. It is not fundamentals of Islamic banking and finance. My assumption was that, or will be that most of the participants would have the basic concepts of Islamic finance. Regardless, I'll discuss what murabba is. It's when a client approaches a bank, they want to buy, for example, a car. They don't have the money. The bank will now, an Islamic bank will not give them the money to buy the car. What they will do is they will buy the car, let's say for $150,000, and now resell the car to the client for $150,000 plus some markup. Now, someone will tell me, no, this is the same as profit. The markup and interest is the same thing. No, it's not the same. Conventional bank is giving you the cash, physical cash. You go, you can choose to buy the money. You can choose not to, the car, you can choose not to buy the car. You know what I'm saying? And the interest there is fixed. It's fixed interest, regardless of the outcome of the economic activity. The Islamic bank, what they do, they are buying the car first, taking ownership from the hadith that you cannot sell what you do not own. So we are now referencing this to the hadith that first we are taking possession of the item. We are taking possession of the item first. That makes it Sharia component. And now we will enter into a buy, which is the loan has now been cancelled. It is now converted into a buy and sell. This is from the Quranic verse that trade is permissible, but riba interest is not permissible. So using that, you are now entering into a buy and sell on the agreement, the mutual consent between the two parties, which we discussed earlier on, freedom of contract, the presence of the asset, and agreeing to buy the asset and agreeing to sell the assets from both the buyer and the seller. Salam is a forward delivery and istisna. This is not the subject of discussion. The investment is in the form of mudarraba. If you deposit your money in an Islamic bank, the deposits are in the form of mudaraba, the bank would invest the funds in Sharia compliant principles, and profits will be shared between the bank and the client. The bank probably will take 40% of the profit and the client takes 60%, depends on the agreement. Supporting contracts are in kafala, that is guarantees. The bank would guarantee their client who wants to import containers of maybe fertilizer, they want to import vehicles, they don't have the money, but they need a guarantee. They need a guarantee to be able to effect that transaction. And Qardul Hassan, I've mentioned this earlier on, that is a gratuitous contract which doesn't attract any profit. In the interest of time, we will look at the major activities of conventional banks. That is, we will compare it to what the Islamic banks would do. In this slide, the deposit creation, that is, the conventional banks would create deposit, they mobilize deposits from their clients, and they finance these activities. That is, people come take loan, they give them the money. Agency services, the bank serves as an agent in letters of credit for their clients and issuing letters of guarantees. I just mentioned this for people who want to import on a large scale, and they do advisory services for their client and other related services. Islamic banks are more into consumer and trade financing, Sharia compliant investment, deposit creation, wakala, that is agency services. Agency services is when the bank becomes a wakil for the client. The client wants to execute an economic activity. For example, they want to import a container from China, or goods and services, or actually goods from China. They approach the bank. The bank become the agent for their client, because businessmen are more comfortable now dealing with banks than individuals, fear of fraud and other criminal activities. Islamic banks would also offer advisory services. To familiarize you with the operational activities of Islamic banks, these are the assets and the liabilities of an Islamic bank. Participants, are we together? Because I want you to have an understanding.
Yes, sir. Interesting session, sir. Go ahead,
Beautiful.
sir.
Beautiful. Okay, this is the balance sheet of an Islamic bank. That is, you have the assets and the liabilities. Under the assets, I've discussed the murabbaha, the ijara, the istisna. Salam is you pay now, you pay for the money today, and the goods will be delivered in the future. That is a salam contract. For example, the farmers in Nepal or Bangladesh, they need money to buy the seeds and the fertilizers. They don't have the money. So they will approach the bank. The bank will give them money to buy the fertilizers. When the bank gave him money to buy the fertilizer and the seeds to plant the crops, when they harvest now, they will sell and give the money back to the bank as agreed, or they will hand over the bank the product. The bank will sell the product depending on how the agreement. Qardul Hassan is where you have actually the liability side is the current asset or the current account and the savings account. And under that, you have the Qardul Hassan and the Wadia deposits. On the investments is where you have the Mudarraba and Musharraka. Mudarraba is when it could be in two forms. It could be in tier 1 and tier 2 Mudarraba. First tier is when the client deposits the money in the bank, it is in the form of Mudarraba. When the bank takes that same money, the Islamic bank, and invests this money in their client's economic activity, that is another Mudarraba. So the relationship would depend now on the profit sharing ratio. The Musharraka is when the customer wants to buy a generator for $50,000 and he doesn't have the money. The generator costs $50,000, but he has, let's say, $25,000. Okay, so he's going to combine this with the bank's 25 to invest in the generator. This is a Musharraka, joint venture. It's basically a joint venture. General investment accounts in a bank are the Mudarraba, and the services that they offer are the kafala or the wakala or the kafala basis, the guarantees and the the agency. The sukuk, I talked about this earlier on. Sukuk is under the Islamic capital market, and I gave an example in Nepal. In the interest of time, I'll move to Islamic bank's balance sheet. This is the conventional bank's balance sheet, and this is the Islamic bank's balance sheet. The sources of funds are the special deposits that they have, deposits from interest-free loans, that is Kardul Hassan, deposits based on fund management here, and the share capital of the bank. Under the application, it means how does the bank generate the money? How does the bank actually mobilizes the funds? And how do they apply them? This is basically what we are trying to talk about here. Under the application, you have the special financing, the investments, the leasing. Leasing is an example where it's the same as ijara here. You buy the car for the client, you rent it to him, and he keeps on paying on rental basis until at a time that he finishes the payment, you hand him over the documents, and they get to own the car. Trade or sale, this is the buy conversion loans to trade-based activities, buying the assets first and now selling the asset to the client. Now, what are the sources of funds? That is the type of deposits in an Islamic bank. The type of deposits are the savings, the current, the term deposits, and the investment deposits, and they are called the card or wadia deposits under the saving and current. You also have the wakala and the commodity mudaraba here under the term deposits, and investment will be under the mudaraba deposits. Let's see how a conventional bank looks like. As I explained earlier on, this is the conventional bank. It's a borrower and a lender. That's the nature of a conventional bank. The conventional bank is a borrower and a lender at the same time. The depositors lend the conventional bank their monies, and the borrowers collect this money from the conventional bank. The depositor agrees with the bank at a certain interest, we said 3%, and the borrowers will agree with the bank at 10%, as we mentioned earlier on. This is a contract of 3%, this is a contract of 10%. The difference is 7%, and that's where the conventional bank leverages to make their profit or their interest, for that matter. Very unjust. Let us now look at how an Islamic bank look like. This is how an Islamic bank look like. This is the structure where you have the Islamic bank, and you have the Islamic bank as a corporate and the Islamic bank as a fund money. Now, what happens is the shareholders contribute money to form this bank. The depositors would also bring their deposits. So the funds now will be commingled. You will have two pools. You will have the depositors pool and you will have the shareholders pool. So when these funds are commingled here, based on what? Based on equity, that is a joint pool of capital, which will now be invested on profitable ventures. This money will now be invested in profitable ventures, and returns and losses will be shared both by the depositors and the shareholders, who are the ultimate owners of the bank. In an Islamic bank, you have board of directors, that is internal auditors, and you also have a Sharia board or Sharia auditors. You don't have Sharia auditors in a conventional financial system. That brings us to the end of section 2. We will now go to the regulatory framework for Islamic banks and financial institutions. The regulatory framework for Islamic banks and financial institutions. We've looked at the principles and the fundamentals of Sharia. We've looked at the differences between the Islamic and conventional banks and financial institutions. We are now going to take a look at the conventional or the regulatory regime for Islamic banks and financial institutions. Are we together?
Sure, we are.
Beautiful. Beautiful. Now, regulation. You see, when we talk about regulation, this is just to say that financial institutions are not allowed to do whatever they feel like doing in financial transactions. So there is a body, there is an institution that is regulating all the financial institutions, the banks, the microfinance, the insurance companies, the takaful, that is the insurance companies. All of these are regulated by an institution. And in most cases, it is the central banks of a country that regulate all the banks and other financial institutions in a country. So let us ask ourselves 3 questions. Why do we need to regulate? And what do we regulate? And how do you regulate? You need to understand these 3 key elements. That is, why first of all, why should you regulate? What do you regulate? How do you regulate? You regulate in the first place because financial institutions are very, very complicated. You must regulate them to make sure that they do the right thing in terms of Sharia compliance. We are regulating because banks are different from other entities. A bank or a financial institution is not a shop. It's not a factory. It's not like any other business. This is people's money that is deposited in a bank to be invested in profit-making ventures. They provide finance to other entities. They support the payment system is linked in a financial institution. Financial intermediation and the contribution to the general economic development. Banks help in financial intermediation. Therefore, any institution that is involved in such a magnitude of financial intermediation requires proper regulation from the central banks. The argument for Islamic banks regulation are similar, but they include the following. That is to safeguard the interests of demand depositors. Demand depositor is a wadia or a demand deposit, which face risk. There is a risk associated with this deposit. When people put their money in these banks, the depositors must be protected. And the only person that can protect these depositors is the regulatory body, that is the central bank. To safeguard the public good, regulation would provide benefits that the market cannot supply in its own. That is to protection of investment and interests of other stakeholders. The bank will tell the banks, that is the central bank, will tell the banks that the amount of loans you are giving is too high. So you have to cut it. That is, your loan to deposit ratio is extremely high. So you need to look at that. Your risk-weighted assets. So the central bank basically monitors the activities of commercial banks or Islamic financial institutions. To mitigate risk, financial systems should be protected from the systemic effect of Islamic banks' withdrawal runs. For example, when there is when news breaks out that there is issue of funds, like customers go to a particular Islamic bank and there is a little bit of system issues. It will start from a minor problem, a system issue, and customers are queuing. They cannot get their money because the system is pretty slow. And then word will now start to spread. People see people queuing outside. But what's happening in Bank Zahra? What's happening in Bank Zahra? And then someone will just whisper that, I don't think they have money. Maybe they're struggling with money. They don't have money to pay their clients. When this word starts to spread, the people who already have money in that bank will now start to queue to withdraw their money because they don't feel like it's safe to keep their money in the bank. So this will create systemic risks in the industry, that is the Islamic banking industry. Failure of Islamic bank could lead to contagion effect of other institutions, thereby causing failure in the entire financial system. If one Islamic bank fails, that is why Islamic banks need to be monitored so that they don't collapse. If these banks are not monitored, they collapse because they will enter into super risky ventures. They will create bad assets. Bad assets or toxic assets are assets that would not yield the expected return. You give out a loan knowing that the client cannot pay back. What you have to do is to write it off. Writing off is to say that now we are 100% sure that the client cannot pay back this money. So banks need to be monitored not to enter into that, because if it happens and one bank fails, if one bank fails, it may lead to the failure of another bank because the banks are interrelated. That is the contagion effect on other financial institutions. The effect or the unique nature of Islamic banks requires regulators to evaluate risk and benefit. Islamic banks or financial institutions are unique. That is, they are guided by the principles of Sharia, unlike the conventional banks. It is also meant, we also regulate to protect public resources. Deposit insurance would create a liability for the state if the government creates a deposit insurance, that is insurance for customers' deposits, that is a liability for the state because the state is spending money on it. There's need to regulate to ensure that public funds are protected. The funds that are in the commercial banks, the banks, you see, the banks operate using people's money. This is what you need to understand. So if a bank is operating with billions of dollars using people's money, that bank should be regulated to make sure that the people who are depositing, the clients who are depositing their monies in that bank are not betrayed at the end of the day, to impose market discipline as well. The other point for regulation would be to promote integrity of fiduciary contracts. What are fiduciary contracts? Fiduciary contracts is when it ranges from the shareholders and the clients and the bank. The shareholders put money together and they'll task the bank now to invest this money in Sharia compliant products and services. So it is now the job of the management of that bank to invest the money in non-interest products and services. That is a fiduciary responsibility of management. The depositors, on the other hand, would deposit their money in the bank and they will now tax the bank. They are not the shareholders, but they are now co-owners of the bank. That's the difference between a conventional bank and an Islamic bank. Now, it is the responsibility of the bank to invest those funds that the depositors deposited in their bank in Sharia compliant ventures. Above all, Islamic financial institutions are expected to comply with the principles of the noble Sharia. They are expected to comply with the principles of the noble Sharia. Any Islamic financial institution that exists and is not in compliance with the principles of Sharia is not fit to survive. It must be eliminated because Sharia is the basis for Islamic financial contracts. That will take us to what to regulate now. We've discussed why regulating. We are now going to talk about what to regulate. The nature of financial intermediation. Contract is based on principal agent relationship and profit and loss sharing ventures. The PLS would mean profit and loss sharing ventures. The contract between the depositor and the bank is a principal agent relationship. And depositors versus investors, fund providers in an Islamic bank are investors as opposed to depositors in conventional banks. I've already elaborated on this. That is the nature of contracts between an Islamic bank and a conventional financial institution. Systemic risk, that is, Islamic banks also face runs which may pose systemic risk. I've talked about this, word spreading around that one of the banks is not honoring its client, and that may lead to a systemic risk. Further down the line, that may also lead to reputational issues, because what affects one Islamic bank would be linked to another Islamic bank because the asset size compared to the conventional system is pretty small. So it's easier to attribute failures to Islamic banks as a result of the reputational issue in one financial institution. Okay, I will take you to the process of licensing, capital requirement, the transparency required, and the Sharia compliance for Islamic financial institutions. We've gone beyond the time. Mr. Jawo, shall we proceed? Is Mr. Jawo with us?
Surely we can.
We may proceed, right? Okay, So let us now look at the licensing process. We will look at the licensing process, we will look at the capital adequacy, and we'll also look at the transparency that is required in Islamic financial institutions.
Sorry, Mr. Jawo, we can inshallah proceed.
Okay, sounds good. Sounds good. Now, the licensing process, first of all, before an Islamic bank is licensed, it has to meet all the requirements of a bank that is under the regulatory framework of that country. Different countries, different regimes apply for different countries. What may be applicable here in West Africa or in the Gambia may not be applicable in Malaysia, but the core principles, that is the licensing stage, basically would be very similar. So the capital requirement for any bank to operate or a financial institution, you need to have a minimum capital requirement. For example, in the Gambia, for a bank to operate, you need to have a capital of 200 million. What that would be in dollars, I'm not sure, but it's close to 200 million at the current rate. So for you to operate as a financial institution, those are some of the requirements as a bank to have a minimum capital requirement to be contributed by the owners of this bank, which amounts to 200 million. Islamic financial institutions are expected to be transparent in their activities. They must be very, very transparent, unlike the conventional banks. In conventional banks, the clients are not directly involved in the management of the bank. For example, I'll give an instance of a restricted mudarraba. A restricted mudarraba is where the clients would tell the bank, I am depositing my money in your bank, but my funds are restricted. I don't want my first funds to be invested in the pool where you have tourism. I don't want my funds to be invested in the pool where you have agriculture, because that is highly risky for me. I'm not a risk bearer as far as that is concerned. So that is restricted mudarraba, where the customer participates in the running of the bank, not the operational issues, but the core issues where they will restrict their funds. And Sharia compliance, any bank or financial institution, Islamic financial institution, that is not in compliance with the principles of the noble Sharia is not supposed to exist, because once the purpose of the existence of the bank, this is what makes Islamic banks unique as far as financial transactions are concerned. That's basically, apart from the avoidance of riba, what makes them different. The type and degree of regulation may differ, like I said earlier, from country to country and institution to institution, depending on the core principles that I mentioned earlier, followed and their risk profile. Each institution has their own risk appetite. The risk appetite of one institution may be different from the risk appetite of another institution. For example, Islamic banks that follow full risk sharing principles follow minimal regulation. As long as the Islamic bank or financial institution is following the risk sharing principles between the client and the bank, minimal regulation is required here. But if that is defeated, then this is when more or tighter regulation would be called for. Less emphasis may be placed on capital requirements as a result of the above point, and more emphasis should be placed on transparency and disclosure. For example, the bank makes, or the financial institution makes profit. Okay, you know, when they invest in mudarraba, normally they will have. I'll look at a slide on this as we progress. That is the risk. They will put a certain amount in the risk as a risk element, basically. You know, supposedly the investment doesn't go as planned, so an amount is put aside. So what that happens, that is the PER, the profit equalization ratio. The profit equalization ratio is meant to smoothen the what if condition. If so and so happens, by the time it happened or before it happened, the Islamic bank would take, let's say, 3% of the expected profit and then put it aside. So that if the profit doesn't turn out or doesn't come as expected, that money will now be taken to smoothen it, because the understanding here is that clients, they understand the concept that it's a profit sharing venture or business, but practically hardly you would find a customer of an Islamic bank accepting a loss. This is across the industry. Customers would not accept loss. So Islamic banks understand this. That is why they use it to smoothen the profit sharing venture. Someone has a question? Okay, so what we are discussing here is, if now the bank has kept a lot of money in that PER, that is the profit equalization ratio, profit has been smooth, the bank has been performing, what are they going to do with the money now? What are they going to do with that money that is set aside? Some banks, out of non-disclosure, would choose to be silent with that money, which is non-compliance as far as regulatory regimes are concerned. We discussed the two-tier mudaraba or window, which is based on profit and loss sharing, a good example requiring less regulation due to market discipline embedded in them. Lecture or presentation proper will continue to the difference of Islamic finance model in various jurisdictions are meant to suit local requirement. What we have in different countries, that is in Bahrain, Pakistan, Sudan, the UAE, and Malaysia, are the biggest players in the Islamic finance industry. Someone would ask, why is Saudi not there? But if you're talking about Islamic finance, although you have the IDB in Saudi Arabia, but the major players in terms of asset size are not found in Saudi Arabia. Sudan, for example, had more than, in 2015, they had more than 40 banks and microfinances, Islamic microfinances, Takaful, and other Sharia compliant financial institutions during the time of Omar al-Bashir. You might fault Bashir for other things, that's not the subject of discussion, but you give him credit for Islamizing the economy. The Central Bank of Sudan is based on Sharia at the time. I haven't done a research on it of recent of what the soldiers are currently doing there, but what I know is that the central bank was based on Sharia, and all banks at the time were based on Islamic principles. Enough of that, the system, the legal, Sharia governance, these are the key components. In Bahrain, they have the single system, Pakistan the same, Sudan, they have single with national aspiration to have fully fledged systems, which they did. UAE is a single, Dubai is the existence of a dual financial system, that is the interest base and the conventional base. So in the legal framework, you have a single legislation which is covering both the Islamic component and the banking component, and you have a comprehensive regulatory framework for Islamic financial institutions. That's what you have in Bahrain. In Pakistan, you have a single legislation with specification to address Islamic banking operations. I mentioned this earlier on. In Pakistan, they have a single legislation with specific provision to address Islamic banking operations. They also have the conventional system, but it is highly Islamic or Sharia compliant bias as well. Banking Business Regulation Act is what they have in Sudan. And in UAE, you have the single, and which covers both Islamic and conventional banking. And that's the federal law. They have the Takaful or the Islam. These are the legal frameworks that they have in the different countries. In Malaysia, a dedicated law and act to address Islamic finance. They already have a dedicated law that is a regulatory regime, which was enacted in 83. The Takaful Act was in 84, and the Government Funding Act in Islamic finance was in 1983. All right, so we will look at the legal and the regulatory framework. No one size would fit all. That is why approaches or different approaches are required for different financial institutions in terms of regulations, and in terms of legal and regulatory framework. First of all, you need to understand the fundamentals. That is, Sharia as the backbone of Islamic finance has to be the basis for regulating Islamic financial institutions. If you are regulating Islamic financial institutions, Sharia principles must be highly observed. There must also be a specific approach to be taken to ensure adherence to the principles of Sharia. Appreciate the uniqueness of Islamic banking, recognize that Islamic banking is a unique business, and understand that there's a distinctive risk associated with Islamic finance. For example, conventional banks are only faced with one risk, that is credit risk and operational risk. But for the Islamic bank, they are faced with all the risks associated with conventional bank. At the same time, they have their own risk, which is the Sharia compliant risk. Are we together?
Assalamu alaikum.
Assalam.
Mr. Jawo, inshallah, we have 8 minutes before the Zoom ends.
Okay. So I will wrap up quickly, inshallah. I still have more slides, but I've talked about what to regulate. I've discussed the licensing. I've talked about the Sharia governance. The capital adequacy is the capital adequacy ratio is a central part of business, particularly banking institution, is done through the following. It is the indicators that will gauge the soundness of a bank, how sound the bank is in terms of being exposed and in terms of being able to serve as a cushion for losses. When a highly capitalized bank, the bank which has a high capital, stands a chance of absorbing losses than a bank with a low capital adequacy ratio. Numbers are 8%. That is, the Basel Committee recommends 8% as the capital adequacy ratio percentage for all banks. We've talked about Islamic banks, financial intermediation. I will now draw your attention to not the capital adequacy frameworks, which I touched briefly, but let us now look at the frameworks for developed based on universal prudential wisdom with extra consideration on specificities of Islamic finance. Preserve sound financial system is the objective, and to preserve the sanctity of Sharia contracts. The governance aspect of it, the capital adequacy framework for Islamic banks, the identification and measurement of risk based on underlying Sharia contracts, the profit sharing investment accounts as a risk absorbent framework, where you have the assets that are funded by the PSIA does not require capital if comply with requirements for the effective risk transference. The rate of return risk, this is meant to be standardized to make sure that it is not different from different institutions or different financial institutions. So what we're saying here is to standardize a methodology to compute the rate of return payable to depositors. You don't say, you don't pay customers, let's say 5% this time, the next time you pay them 3%. You need to have a standardized mechanism. Here I know they use the Sukuk rate, if not the LIB or the London Interbank borrowing rate. The Sukuk rate is used to set a benchmark for the rate of return. Property and development investment activities, they carry a higher risk if you invest in the real estate sector. Some of it is literature, so I'll probably browse through the slides. I don't have much time, but I know we have an important component that is the Sharia governance issues in Islamic financial institutions, which is expected to be the part 4. I think I'm running out of time according to Brother Chow. So I'll just look at the Sharia governance framework being an important component of Islamic financial institutions. We will skip the background. We'll go straight to how it look like. That is the Sharia governance framework. You have management, you have the board, you have the Sharia committee. you have at the top the Sharia Advisory Council, that is the SAC. In Nigeria, I know they have the SAC, the Sharia Advisory Council, and you have management, you have the board and the Sharia committee here. Sharia compliant functions would be to review the Sharia compliance of the bank and to do a Sharia audit both internally and externally. Sharia governance framework and to set Sharia parameters and Sharia resolutions and rulings at the end of the day or during the time of the product development, where the advisory council will validate some product and nullify some product. Let us look at the governance models which we have. You have the central bank, Islamic financial institution, you have the governance framework, and you have the country. In Malaysia, they are under model 1. Bahrain is under model 2, and Jordan or Saudi Arabia is under model 3, where you have dedicated legislations and ruling, no Sharia governance in their financial institutions or Sharia committees. The objective would be to expect the central bank or financial institutions to process and make arrangements to provide a comprehensive guidance to the board. And the guiding principles would therefore be independence of the Sharia board, confidentiality, they should be confident. There should be some level of confidentiality in their operations. They should be consistent in their rulings. They should be competent, meaning you have to have people who have the requirement, oversight as well. They should have a firm grip up to the game as far as the financial institution is concerned. They should know everything that is happening in the financial institution, and they should be held accountable and responsible of the fatwas that they give. I'll skip that and I'll take you to the governance. An important part of deposit is based on the profit and loss sharing, and Islamic banks are involved in trade and investment. Operators and products should be compliant with Sharia. This is what you have, that is the insurance deposit, the governance, and the capital adequacy. And this is what the Sharia boards would do. I'll have you look at it for about 1 or 2 seconds. I wouldn't say much on this slide since it's just to read about the responsibilities of the Sharia board. 1, 2 seconds, and I'll conclude with these references. It wasn't my own work. I looked at the works of Abdullah Al-Hassan, and I looked at the works of Abbas Mirajo. I looked at Omar Chapra, famous writer, and I looked at my professor's work, that is Dr. Abdul Karim Jawo, who is the head of the Islamic Finance Department in CESAC, where I graduated, and also the founder of ITCA consulting firm in Senegal. That should be it from me. Subhanaka Allahumma bihamdika ashhadu an la ilaha illa anta astaghfiruka wa atubu ilayk. Barakallahu fiik.
Assalamu alaikum. Thank you, Mr. Hamar. Thank you very much.
Alhamdulillah. Okay, so how you guys doing?
Alhamdulillah. How is Central Bank? Mashallah.
It's mind-blowing.
Alhamdulillah. Alhamdulillah.
Alhamdulillah. Thank you.
Who am I talking to right now?
You are talking to our Kedanso.
Ah, my sheikh, subhanallah.
Mashallah.
I am speaking, my ustaz is listening. I should have been listening.
Ah, mashallah, alhamdulillah.
Subhanallah.
Well, thank you for this wonderful presentation.
Subhanallah, sheikh. We are humble. We are in fact shy that our sheikh is here and we are talking. Subhanallah.
Mashallah. I benefited a lot.
Barakallah fiik.
Inshallah, ma jazakumullah khairan.
Wa iyyak.
Okay, thank you.
Brothers from Nepal, we are very grateful. Barakallah fiik. Tajuddin Mansoor.
Mashallah.
It's so mind-blowing. Mashallah. Sir, I would like to continue my study regarding this. I have very eager to learn about Islamic banking, and just today I saw this presentation post on Facebook, and I I clicked on that and I attended this session. It was very interesting and very mind blowing. I am
Inshallah.
just blown. My mind is blown up by such kind of use, and I would like to pursue more
Alhamdulillah.
learning about this session, about this topic. So how I can proceed with this further study regarding these subjects?
You probably need to contact the organizers or register with the IOU, that is the Islamic Online University, the International Open University for that matter.
Okay, inshallah, I'll do that. And how to be connected with you? You're in a online social media group, chat or something, your page?
I'm not very active on Facebook and stuff, but I know I can share my details with you guys. That is my email and my WhatsApp number. If you like, I can share it with all of you. I don't mind. I can share my WhatsApp number, inshallah.
Sure.
I'll try to write it down, inshallah. Just give me a second. If the organizers would let us do that. I'm trying to type and see WhatsApp. Yep. Okay. Should it? I know I've written it. It's plus 220 366 5902. Plus 220 366 5902. If you have one or two questions, I'll probably take them, and then we should be out of here, inshallah. Okay. So in the absence of questions, Brother Chow, are we good to go? So in the absence of questions, all right. Assalamu alaikum. Brother Chow, are we good to go? Right. So that's it.